What's going on, guys? Happy Saturday. Happy Saturday. Look, I wanted to come in. We had an amazing free investing class on Thursday, and I got a question that I wish we would have had on the call on Thursday. And so I wanted to come here and answer this question specifically. Look, if you're investing money right now, you need to stop what you're doing and listen to what we're about to talk about. Most people are making a huge mistake when it comes to investing their money. A lot of people are asking, what should I be investing in? When the question that you really need to answer is, how much should I invest? When you get this wrong, it can cost you thousands of dollars. But here's the thing. It's not just investing more money. Okay. It's not just investing more money. The biggest mistake isn't investing too little. It's actually the opposite. And in the next few minutes, what we're going to do is I'm going to show you the exact formula I use to determine how much to invest, whether you're starting with $100 or if you're starting with $100,000. So, and stick around to the end. I'm going to tell you how to join my free investing class. That's tomorrow, Sunday, 4 p.m. Eastern Standard. And we're going to dive deeper into this conversation. We're going to get into the details, and I'm going to help you design your first investing strategy. All right. So the question came in Thursday during our free class. We were talking about investing during the dip. I truly believe that we're entering a season where we may see the stock market dip. And although the news is going to sensationalize it and is going to place blame, the biggest opportunity is investing when you get that dip. So on Thursday, we talked about a strategy that we used in April where you can truly maximize your returns during a market dip. But during our question and answer period that came, and honestly, this didn't even come during the question and answer period Thursday. I actually got an email from a guy that attended on Thursday, and he said, Courtney, well, you're telling us to buy the dip, but how much should we invest? And so I'm going to answer this question in two ways. All right. And anybody that's here that missed the Thursday free class, I'm actually doing a special version of that class tomorrow, which is Sunday, 4 p.m. Eastern Standard. The link to register is in the description. So if you see that link, say I see it, and make sure you join tomorrow at 4 p.m. Eastern Standard. We're going to dive deeper into what we're about to talk about right now. The class tomorrow, it's completely free. So the question that came up was like, well, Courtney, you said to invest in the dip. Well, how much do we invest? Here's the thing. That's going to be different for everybody, but I'm going to give you a few pointers that's going to help you determine what that amount is for you. And I'm going to do this fast. We're going to take some time with it tomorrow, but just so you all know like where the conversation is going tomorrow, I'm going to tell you. So number one, everybody should be investing consistently. That consistency should align with how you get paid. If you get paid every week, you need to be investing every week. If you get paid bi-weekly, you need to be investing bi-weekly. If you get paid once a month, you need to be investing monthly. And this first way that you're going to calculate how much you need to be investing is basically what you can afford. We also say that we also call this dollar cost averaging. And you're going to either set your calendar up to remind you to invest, or you're going to do it automatically through your digital broker. All right. So every single month, you want to determine how much you can afford. So you're going to look at your income, you're going to look at your expenses, you're going to see how much you have left over. And of what you have left over, you're going to determine how much of that you can actually afford to invest every single month. This is going to allow you to get a lower average cost per share. Everybody, regardless of how much money you make or how much money you have, should be doing that consistently. Because even though I talk a lot about strategy, I talk a lot about buying stocks at a discount. I talk a lot about how well we do buying stocks with bad news. The thing that will work in your favor the most is consistency. So we have to have the consistency in place first before we start trying to figure out strategies to find discounts. So that's how much you can afford. Number two, you need to make sure that you don't have too much in your savings account. A lot of people are trying to figure out how much they need to be investing, but they're actually saving too much money in your savings account. Saving, remember, saving is for safety, not for building wealth. Okay, so you want to have 6 to 8 months of your expenses in your savings account, plus any short-term goals. Whatever the total is of 6 to 8 months of expenses and short-term goals, that's all you should have in your savings. Anything above that total needs to be in the stock market. Number three, you need to work backwards. Everybody should have a freedom number. It's a number that you need to have in your portfolio to never have to work again. It will allow you to live off of your portfolio. Your portfolio will pay you every single year. So this is a number that truly gives you financial freedom where you can wake up and live off of your investments. Tomorrow on the free call, if you missed it, I'm doing a free investing class where we're going to talk about strategies to determine how much you need to invest. Okay, we're going to talk about some other stuff on that call too. And this is definitely for beginners at any skill level. The link to register for the strategy session tomorrow, it's in the description of this video. So get that description. Make sure you register. All right. Make sure you register. So then you need to figure out what your freedom number is, how much you need in your portfolio to pay you forever. All right. Then you can use an investment calculator to work backwards to figure out how much you need to contribute to that goal. All right. I'm going to show you how to do that tomorrow as well. So, Venice, your freedom number is the amount of money that you need in your portfolio so you never have to work again. This is a thing that we all should be working towards. We don't want to continue trading time for money for the rest of our lives because we don't own our income. Our income can be taken away from us. But when we invest and we invest consistently and we invest towards a goal, our goal is to have so much money in our portfolio that we can live off of the growth in the portfolio so we never have to work again. That's your freedom number. I'm going to teach you more about this tomorrow at 4. So I'm not going to spend a lot of time on it right now. Make sure you go to the link that's in the description of this video and register for tomorrow. No. That's cool. No, you fine. I welcome the questions. And guys, if y'all have any questions, drop them in the chat. I'm going to answer them. I didn't intend for this to be very long. I know it's a Saturday afternoon. So I was just trying to go through it fast. And I want to encourage everybody to click the link in the description to be on that call tomorrow at 4 p.m. It's completely free. And we're going to dive into all parts of this tomorrow. We want to make sure that you have a strategy for determining how much you should invest and make sure that that's working for you. But that freedom number is the number that you can have in your portfolio. You can live off of about 5% of that every single year and pay all of your bills. You don't have to work. That's your freedom number. We call it freedom because you can do what you want to do. You don't have to go to work. You don't have to go to a part-time job. You don't have to be stuck to one location. You can be anywhere in the world making money. That's one of the reasons why I love the stock market. That's your freedom number. So the third way that you can calculate how much you need to be investing is by using an investment calculator, figuring out how much you need to invest on a monthly basis to hit your freedom number. All right. And then let me say this, and this was the question that really motivated me jumping on here today. So we were talking about a potential dip coming in the stock market now. And many of you all know that I love to buy dips. I love to buy really good companies when the stock market drops. And I'm gonna share this tomorrow as well, but there's a slide where I show you how much you need to be investing based on the dip that's taking place at the time. So I just talked to you all about dollar cost averaging. It's the amount that you can afford to invest on a consistent basis. Now, when a dip is coming, we really get excited when we see a dip that's 10 to 20%. When we see a dip that's 10 to 20%, we want to take advantage of that because it'll significantly lower our average cost per share. So I tell people that when you see a dip that's about 10 to 20%, you can start doubling whatever you were dollar cost averaging because that's going to really allow you to get a lower average cost per share. When you start seeing the market drop more than 20%, this is a really, really good investing opportunity, okay? That's what we want to see, all right? That's what we want to see. Hey, Diane, we want to get those huge drops in the market. And the news isn't going to be positive, guys. It's going to be scary. The news is going to have everybody captivated, and there's going to be some shocking headlines. All of those things will be taking place. But when we get drops that are 20% or more in the market, when you get drops that are 20% or more in the market, that's when you look at any lump sum of cash that you have, and that's when you put that into the market, okay? If that's extra money that you may have in a savings account using that formula that I just gave you all a moment ago, if you have more than 6 to 8 months of your expenses plus your short-term goals, you have more money in that account than that, you want to take that cash and invest a lump sum of that in the market, in good companies, in good growth stocks and mutual funds once the market drops 20% or more. So that question really, really stuck to me. It came, so the guy was on the call Thursday. He sent me the message Friday. And I was like, man, I really wish we could have spent more time talking about that Thursday. So I'm like, all right, this is what we'll do. If y'all know how I am, if there's something that I feel like you all need to have, I'm going to run it back. So we're going to do our free investing class again on Sunday, 4 p.m. Eastern Standard. The link to register for that, it is in the description. If you're investing right now, you need to hear what we're going to talk about tomorrow. So many people, they're making a huge mistake in how they approach the stock market. They focus a lot on what to invest in, but where they're hurting themselves is they don't have a clue how much they should invest and when. This is costing people tens of thousands of dollars. Oh, I definitely believe in holding for the long term. Listen, anything that I talk about, I'm talking about long-term investors, buy and hold. I speak to the everyday person. I am a buy and hold investor. That's why I'm talking to you about consistency. Look, one of the mistakes that people make is that they think that they're going to time the market over and over and over again and only invest when things look favorable. That's why I started this call off. If you missed the very beginning, I started this off with dollar cost averaging because being consistent in the market, regardless of how much you invest, that's going to be the thing that's going to work for you the most because it gets you in the market, it gets you invested. You're going to do that all of the time. And when you've set money aside the correct way, you will build up lump sums of money that then you want to make sure you know how to take advantage of dips that come. We're going to talk about all of this tomorrow, you guys. Again, the link to register for tomorrow, it is in the description. If y'all have questions, drop the questions in here. I'll answer those right now. I have a couple more minutes. We're there. We'll be there. Thanks so much. Oh, awesome. Look forward to talking with you tomorrow. Tomorrow, 4 p.m. Link is in the description. Guys, the mistake of not investing the right amount of money it is impacting your net worth. So I want to make sure you understand the strategies that will work best for your portfolio. Look, it's not just about investing more money, okay? It's about having a strategy and a plan and understanding what to do based on what's happening in the market. The people think the biggest mistake, people think that, oh, I'm not investing enough. And it's not the enough. It's not that you need to invest more money. It's number one that you need to be consistent, because we are investing for the long term and we're investing in really, really good companies. You just need a strategy for what you do consistently. And then you need a strategy for how you buy dips. I've been talking about this for about a week now. I do believe that there's a dip coming in the market, whether there are a lot of different causes for it, which makes me more confident. The economic data is scary. International business doesn't always look favorable. You know, we have some things going on with China right now. We have an upcoming meeting between the Chinese president and Trump. There are things that are happening. Artificial intelligence continues to disrupt what employment looks like in this country. There's a lot of different things that are happening. And so I think we may get a drop. Typically, we see dips in the stock market in the fall anyway. And the market's been so strong, a lot of people were thinking that we may not even get a dip this year, because it just seems like even if there's a little bit of good news, the market runs to all-time highs. And so for the last week, the market has been a little hesitant in order to move in one direction. I think the market really wants to know what's going to happen in this meeting between President Trump and the president of China. They want to see how that's going to go. There were good earnings that helped the market this week. A lot of financials had positive earnings. So there's uncertainty. So the market is kind of staying flat. But I believe that there is mounting negative information that is out there right now. If you kind of check the temperature of the economy and the market, and I do believe that there could, even temporary bad news could result in a pretty dramatic pullback in the market. So you have to have all of your strategies in place so that you're ready to take advantage of the dip, or to take advantage if the market pushes to all-time highs again. So you have to have your dollar cost averaging strategy in place. You have to have your moderate investing strategy in place. When I say moderate, I mean moderate dip in the market. So if there's a dip in the market that's somewhere between 10 to 20%, that's what I consider to be a moderate dip in the market. So you need to have your dollar cost averaging strategy in place, your moderate dip in the market strategy in place, and then you need to have a strategy in place if the market just, drops to the floor. Okay. Twyla, that link, it is in the description of this video. So you got to go to the description, hit that link. If you don't see it in the description, you can go to the description of the channel. It says free investing class, and I do my free investing classes. I tend to do them every Thursday. Sunday has been a really good day. So with the last 2 weeks, we've done Sundays, and we're going to determine if we want to keep that up or not. Vanice says, my consistency sucks regarding investing. Well, let me tell you, when you're investing in a silo by yourself, and like today, you had a little time, so you tapped into the video. Thank you for being here. It can be tough to invest on your own. And so when you be around other people that are being consistent with their investing, and they have solid strategies, and they can share what they've invested in and how they're changing, how much they're investing, that works really, really well for you. So come jump on tomorrow. I'm going to tell you how to improve your consistency when it comes to investing. Sometimes we just need to automate it. Sometimes we think that we're mature and disciplined enough to just do it on our own. And that's a lot of pressure to put on you. You got a lot going on. You have your professional life, you have your personal life, your spiritual life. You probably try to eat vegetables when you can. There are a lot of decisions that you have to make yourself on a daily basis. And some decisions we want to just happen automatically. All right. So sometimes just setting your investments up to where they come out of your account automatically. That's actually the best investing strategy that you can have. I would rather you have okay investments with a strong automated investing system than to lack consistency but invest in great companies. The consistency matters more than what you're investing in. Yeah, Angela, the link, it does say Thursday, but we're going to do it tomorrow. There's been a lot of urgency around what we've been talking about, a lot of interest, and Thursdays have worked for some people and not worked for others. So we're adding Sundays to give people a second opportunity to attend our free classes. So yes, the link does say Thursday, but it is for tomorrow. All right, it is for tomorrow. Angela, thank you for bringing that up. Angela, shoot me an email. I'll send you a link to my calendar, and I can get a little bit more insight and maybe give you some ideas for next steps. Link in the description of this video. It's also in the description of the channel. Any other questions? Not the five, Nicole, not the 5-day investing program. That's my class. That's something different. It's the one that says free investing class. But if you go to the link in this video description, that link will allow you to register for tomorrow. It does say Thursday, but we're going to do it tomorrow as well. I invest $100 to $200 every paycheck to start slow. My goal is to increase to $500. Where you're on point. That's exactly what I'm talking about. When I say I'd rather somebody have a strong, consistent strategy with okay investments than somebody who has a poor investment strategy with great investments, that's what I'm talking about. Be consistent with what you have. Consistency is the most important thing. Kudos to you, Elware. Twyla, listen, join tomorrow. I'm going to tell you some things. We're going to teach you some things that'll really, really help you in your 50s. So click that link. Make sure you register, and I'm going to be looking for you. Just confirm this would be 9 p.m. UK time. Let me check, Angela. Hold on. Let me see. We're going to get Angela. We're going to make sure Angela gets there. Let me make sure I give her the right time. Yep, you're right. You're right, Angela. So 4 p.m. Eastern Standard is 9 p.m. UK time. All right, love to have you to check in from the UK. All right, guys, look, link in the bio. I want to make sure you are investing the right amount. And we're going to dig in. And we're going to talk about some other things tomorrow, too. It's not just going to be about calculating how much to invest. We're going to talk about the importance of investing. If you're a beginner, join. We're going to talk about the basics as well. We're going to talk about how to power the portfolio. Talk about what's happening in the economy right now. So look forward to seeing you guys tomorrow. Link to register again is in the description. Also, link to the free class is in the channel description as well. Listen, I know it says Thursday. We're gonna do it. Listen, I'm doing something special tomorrow for Sunday. So disregard Thursday. We'll still send you the link. The same link will work for Sunday. All right, guys. See y'all tomorrow.